Hi everybody, I'd like to welcome you all today to our webinar on financial institutions of the future. This is based on our research with 45 financial institutions and how they see the future. We'll be discussing the results today with our panel and a white paper with the detailed results of the research will be out shortly after this webinar. So I would like now to pass over this to Chris Smith from our sponsor Citrix. Chris.
Thanks, Geoff. Yeah, good afternoon, everybody. Welcome to the webinar. Really happy for everyone to be here. I'm really excited for today's discussion. As Geoff mentioned, Citrix, we're a sponsor of the research been carried out on the future of financial institutions, and I'm really, like I said, interested in today's discussion. I think we all agree that the last six to 9 months has been a significant impact on everybody's lives as people, but also the industry. And as technology has had a huge role to play in enabling organisations, specifically in financial services, to survive and in some cases thrive in this new environment. And Citrix has been working a lot with many of yourselves and other organisations in the financial services industry to help them through these tough times. I guess now it's about thinking forward. What does the future hold for the industry? What are some of the new challenges and opportunities that it presents as organisations, and specifically for us for technology? So that's why we brought the discussion together, and like I said, really interested to hear the panel's views on some of those topics and delve a little bit more detail into some of the research that we carried out. So again, thanks for joining, and I'll pass back to you, Geoff, to kick off the discussion.
Great, thanks for the introduction, Chris. I'd like now to introduce our panel. Firstly, Albert Maslin, who's the Group CEO for Crown Agents Bank and Crown Agents Investment Management. Simon Nye, who's Executive Chief Risk Officer, UK and Europe from National Australia Bank. Charles Mullinder, who's Head of Change Investment Solutions Services for Fidelity International. Ben Huswell, who's the Head of Market and Liquidity Risk, Europe and Americas for Commonwealth Bank of Australia. And not in picture, but still with us is Andrew Vasco, Group Chief Transformation Officer for Seller. So if you have any questions on the discussion or would like to raise questions in the areas we don't address, please use the question option. We'll try and get to as many as we can. So I'd like to kind of kick off with the first question to the panel in general is, what are the remote working challenges around IT and culture, and how might they be addressed?
Can I answer this question, given I'm the one who is having challenges? I think it's Andrew here, and I'm connected through 2 devices right now, one with voice, another one when I can see, but nobody can see me. So I think one of the challenges is being able sometimes, within one company is okay, but if you've got ecosystem of organizations working together, it's been able to have some sort of common standards. And obviously different organizations have different levels of security, and most likely it's exactly what cuts off video for me right now. While it may not be important for some, I think it's actually super important for interaction. So sooner or later we need to, same as with digital currency or with any currency, we need to set on some sort of standards for collaboration.
No, I'd echo that. I mean, it's in a work from home environment, it's much more complex to really develop in an innovative environment. So, I mean, if I look at our organization, we use a number of collaboration tools, whether it's the Zooms, Teams, Slack. We use quite a few, but standardization is somewhat of a problem. It's much easier in one organization, but it's very difficult to develop a culture, particularly in organizations that are transforming rapidly, to ensure that you have consistency in your culture. If in this environment, it's much easier to do that in the face-to-face world, even if you're not necessarily working together all the time, but just the ability to come together periodically is much harder in the world that we're living in today.
I think there's also a progression here as well with working from home. In the short term, many of the teams are actually the same people that have been in the organization already. But as we move through time, new joiners coming in will be a challenge. getting the right culture and fit remotely is very difficult. Possible, but very difficult.
Yeah, it's also certain functions are much easier. So we've got engineers who are dispersed, and I'm making a very sweeping generalization, but engineers can work remotely to far greater extent. What we find is other functions are much harder in that remote environment. We've done a lot of recruiting over the last, well, really since March, and to your point, Ben, integrating new people is simply more challenging. It's not impossible, but we need to change the way we think about it. And we're struggling with finding better ways of doing it. I mean, we've been experimenting with different things, but haven't really latched on something that I would argue is really bulletproof and working as well as, you know, our more traditional when everybody came into an office environment.
Exactly. And in my field, in an institutional markets business, where you've got a trading floor or a sales floor, interaction with my risk function, for example, is very heavily reliant on visual cues as well. So remote working is very difficult if those functions are all on different platforms or all on different communication channels.
Excellent, excellent. So looking at kind of the cloud and what impact did the COVID-19 have on the cloud strategy in your organization? Did it accelerate it, for example? Was everything still set up okay, or so you could move there easily? Perhaps you could grab that first, Charles.
So yeah, I think it definitely accelerated. Certainly accelerated our strategy. I don't think it changed it, but we went from working in a we went to working almost in a BCP environment, and then you start looking at what does BCP mean on top of BCP. What do you need to do? And I think we almost went through this process of trying to understand how we responded over a longer period of time. As soon as it became obvious that the pandemic was going to not just be a 1 or 2 month blip, it was actually going to start to change the way we work. That I think that evolved and accelerated the broader cloud strategy across the industry, not just with ourselves, but across the industry, and it forced people to think a lot more around how you become location independent, which is ultimately one of the factors that builds into that, as well as all of the benefits that you get from moving to cloud.
Yeah, I might just jump in there, Geoff. Like Andrew, I've just had a technological thing. I've been speaking to Ben and speaking to Albert for the last 5 minutes, and they haven't heard what I said, so it's been quite amusing. So yeah, I'm having the same technical problem. Just on the previous question, totally agree with the points that were made. But I do think there is the other thing that we've got to be very conscious of, which has really exploded, and that's the mental health of working from home and the changing environment that we're currently in, because I do think that is becoming a bigger risk, if you like, and that then drives the culture. And people have done it, but there's always been that sort of the sort of backstop that you could still go into the office and meet with people, and that's sort of gone away now. So sorry to go back to the previous question, Geoff, but as I said, I was talking to Ben and Albert, and not they weren't acknowledging me. So there's nothing unusual about that. But anyway, that's fine. That's just on the cloud thing. To Charles's point, I agree, but I probably would say it's sort of had the reverse effect to a degree. I think it's sort of catapulted the impetus to move tons of stuff onto the cloud, because I think the demand has just gone horrendous. And I think, especially for a bank, and especially if you're like Ben and I, where we're operating with a mothership 14,000 miles away, the need to get things and access to things has sort of got bigger. So I tend to feel that in some ways it's defining the cloud strategy for a lot of people as COVID continues.
Yeah. Okay. And Andrew, what's your viewpoint on it?
Again, super practical, and actually what Simon said led me to my current answer, because decision makers around cloud are human beings, and human beings who thought that on-prem hosting is the best, and suddenly within 3 weeks they also thought that you can only work from office, and within 3 weeks you end up working from home and doing everything remotely. Naturally, you understand that you can move stuff to cloud, because if you can move people to home, you can move anything anywhere.
Yeah, I mean, if I look at ourselves, we were digitizing in a significant way. But I think you used the catapult metaphor. What it really did is we had a small number of activities were still hosted on premise. Well, let me tell you, I think all but one are now gone and moved to the cloud, because it simply transforms the ability to work from home, remote, to be able to do that more effectively. So the strategy was always there. For us, it wasn't a change of strategy, but it's accelerated the implementation.
But Albert, maybe definition on premise has changed. What premise? Which one? Yeah. So it's just the whole concept is changing.
That's correct. Yeah.
Okay. Let's have a talk about talent pools. What do you think the change to remote working will have an impact on talent pools available, either from a geographical, social mobility, or accessibility point of view? What kind of impact do you think that this will have? You know, for example, can we have now people working virtually anywhere in the UK rather than having to be obviously able to get to the office each day?
Yeah, if I could jump in there, Geoff, I think, you know, clearly there's more flexibility available to organisations with what we've seen over this period. But if I could just jump back to what Simon said previously about mental health and the issues that are faced in that space, I wondered at the time when Simon was suggesting that whether you see that as a people management issue or a HR policy issue. And I see this as also perhaps a HR policy issue, in the sense that some organisations are far more flexible in the way that they onboard new staff, on the way that they conceptualise where people are located, the types of skill sets that they try to attract in terms of ability to remote manage, the ability to remote work. So does the HR policy support the current move towards geographical changes, social mobility? I'm not so sure yet. I think that has still restrictions in place that will mean it's a slower change than it probably should be.
Yeah, I'd concur with you, Ben. I don't think anybody really grasped how the environment was going to change so dramatically over this period. You know, when I first went into lockdown, I thought, yeah, we'll have about 3 or 4 weeks, and then we'll be out and we'll be having a few beers round the corner because we've done the necessary. But I don't think anybody really realised. I think what's been the process has been the learnings going through this, and you know, and ultimately you're going to have work from home protocols. You're going to have that flexibility. You're going to have to say, yeah, people can work from different locations. You know, you immediately start getting people saying, well, I don't think I'm going to be in the office more than 3 days a week. You know, I live in London, but I'm going to sell my house and buy a house in Aberdeen. Are you okay about me coming in 3 days a week, but I work remotely? And those things are starting to come up, you know, and I'm sure all of us has had that where, you know, you all sit around a table as a leadership team and you go, well, how are we going to set the precedents on this one? And how are we going to sort of make this consistent? So I think there's a lot of stuff that is going to be working out as we go through this, and how we think about we're going to work better going forward, or how we're going to work better going forward. I think one of the interesting things for me, and I do think this is interesting, you're not going to get the you know, effectively the people travelling into London as much. So do you then say to people, well, if you're going to work remotely constantly, then we're going to change your terms and conditions and your contract So you recognise that work-life balance, but you won't get the London waiting, if you see what I mean, for the travel into London. And I think we're moving into a rather interesting piece that's going to start coming out, because one of the reasons people work in London is because they get a higher salary. If you know, you can see where this is going to start playing out as this progresses on. So yeah, I certainly agree with Ben's comments.
Simon, I'm gonna take it one step further. You are talking about UK only. I moved to Italy because of my role, but my wife, who is an architect, still working for UK company, but she's now doing it for Italy. And guess what's going to happen? After 6 months, 183 days, completely new, different type of challenges will kick in, which we never experienced. Yeah, it's like whole new industries coming in early next year, which we don't know how to deal with it. We will deal with it, right? So you're talking about London, not London, country, not country.
Yeah.
Well,
No,
I'd like to get London right first, Andrew. But yeah, you're right. Europe will be the wider pattern, definitely.
Well, it'll go beyond that. I mean, one of the things that we've found, so we're headquartered outside central London, and what we've found is that had certain limitations on the talent pool that was available to us historically. That has, to a very large extent, that's just disappeared overnight. And you know, in our case, we're looking. I mean, we were talking about, you know, somewhere else in the UK. In our case, we've done a couple of recruits 10,000 miles away. We're still trying to figure out how we will ensure those individuals, back to the culture question, how do you make sure you build the culture? Because we no longer have that restriction on where you hire. However, and it's true to say that our HR policies need to evolve, and they're not evolving as quickly as the potential. So it raises lots of very interesting questions, and on the one hand, you want to be agile and adept. On the other hand, decisions we take now, we may regret in 6 or 12 months. So, it's opening all kinds of new issues. I think we're mentioning working from Italy. You know, that raises immediately, potential consequences for, tax issues. Are we potentially creating permanent establishment issues in countries where we happen to recruit a small number of individuals, and there's no consistency around the globe on some of these issues. So there's a lot of interesting challenges that undoubtedly. I know some organizations are simply saying, no, we won't do it, and others are saying, let's do it and figure it out later. And I'm not really sure what the right answer is. From a pure risk perspective, you probably want to figure it out first. But then in high growth industries, it's these trade-offs that are some of the interesting challenges to deal with.
But I mean, I agree with everything that everyone said, and I guess part of the challenge here is you've got a multi-dimensional problem of HR policies and regulations, and potentially regulatory frameworks that come into it. So you've got to work your way through all of those things. I actually think one of my big takeaways from this crisis has been, in many industries, and I think financial services was one of those, we didn't believe people could work from home wholesale. And one of the things that the crisis has done is it's proved that actually productivity and performance and contribution is actually pretty high if you've got a good culture, you've got good controls, you've got good management in place. So I think one of the very positive things is we've broken, almost a mental challenge that managers had with letting people actually operate from work and trying to measure productivity rather than the number of hours people spent in the office. And the other thing, just to throw in here, is if you look across broader industry, there are lots of organizations that have employees that never come into the office. You think about some of the big countries and sales teams. Just once a year they come back to their home office. They're deployed across the country. So the precedents of how you manage people, how you build cultures, how you keep people connected, those types of things. I think there's been a culture in the past in financial services of us not understanding that. Maybe maybe influenced a bit by regulation and the need to, oversight and those types of things. But I think COVID has really knocked some of those barriers down. And to your original question, Geoff, is I think that opens up a whole range of different talent pools for us. We'll have to work out whether somebody in Aberdeen gets paid less than somebody in London, or you can hire somebody in I don't know, Mallorca, can work in their summer house, or whatever it is. But I do think it's broken down some of those barriers around how you get and form high-performing teams. We'll have to work out how you manage them and all those things. But there's a big opportunity here to enhance productivity and creativity and bring diversity into the workplace that we just couldn't do before. And if you treat it as an opportunity, I think it's something that can accelerate the execution of people's strategies.
Excellent.
Yeah, I think that's a great point, Charles. I don't disagree with you. I think dismissing the myth of working from home has been probably the biggest thing that's come out of COVID, to be honest. And I think we can all agree that, when someone used to say to me, "I'm working from home," a certain amount of doubt came through one's mind to a degree, shall we say? But anyway, there we go.
Yeah, but
the big challenge is not everybody is set up to work from home, and that's one of the big challenges, right? And we are still struggling with that because we do have individuals with suboptimal conditions, and we certainly got employees that have whole big home offices and things, but that's the exception actually. So the challenge is often not the willingness or commitment, but working from home comes with lots of other challenges, and we've talked about mental health. There's no question it's a serious issue, but the challenges also of a home life where often many people, their spouses are working, and both needing to access Wi-Fi, and there's no quiet spots anywhere. And now, of course, with children potentially at home and everything else, it's very routine, day to day, where I see, the dog jumping on someone's lap or a child, mummy, mummy, mummy. And we just have to figure out how to deal with that. I mean, that is a reality. We all have real lives, and we have to find ways to do it. I think the efficiency issue and productivity, it varies a lot by, actually by activity, but I think you can manage the productivity issues. But the challenge is you need to think differently about it, and that is the bigger challenge.
Sorry to jump in, Geoff, but there's a few questions coming through the platform.
I was actually going to jump in on one of the questions here, Chris.
Okay, great. Okay, go for it.
Yeah. So one thing I thought was very interesting that was raised about focus, because pre-COVID the industry was dominated by regulatory change. Every day, all you heard was regulatory, and that's kind of taking the back seat to the pandemic now. But what's the panel's view on what's going to happen next from a regulatory perspective? Is it all going to quiet down, and then we're going to jump back onto the regulatory bandwagon?
Has it really declined?
I don't think it has declined. I think once they've learned how to use a computer, I think we'll be back on it. Trust me. I don't think that I don't think that's going to go away. I think they'll find new and unusual ways. I think they're monitoring now because they've been in the same boat, and so they've had to get used to it as well. The PRA went home probably just before it all went into lockdown. 2 or 3 weeks beforehand, they were all working from home. FCA was slightly later, but no, I think they're all just getting used to it and starting to think about what they need to focus on. I think their business plan and their agenda is going to change massively. If you've got a trading room and you've got traders trading from home, that becomes the next big problem for example, Ben and I, about how do I get comfortable about what a trader is doing where I've got no visibility of what they're trading, or whether they're on their own phone, or whether they're doing other bits and pieces. So
absolutely. I think the bits like cyber and conduct are well and truly at the forefront of regulators' minds at the moment, because that's what they immediately think of when they think of working from home challenges and remote working. But the financial risk aspects that I deal with are completely on the back burner. So I think it's variable. How do we gain an oversight of trading patterns, of understanding of how a trading desk is operating as a market risk professional? They're not even asking those questions yet, but they might be at the forefront of some of the cyber risk questions because they've been looking at those since before the COVID crisis.
I think operational risks change. And so we're seeing different types of operational risks coming out. We have certain processes that are not yet fully digitized, and so there's no question there was the formal control process that you have when everybody works together, but it's amazing how it's supplemented by a highly experienced person. Every once in a while, somebody newer will turn around and just say, this is something a little bit different. Is this what I'm supposed to do? And that informal control is gone. You don't get that on Slack or whatever tool, collaboration tool you're using. And so, I think the risk landscape is just slightly different. I don't see regulatory. I don't see a change. I see a focus is slightly skewed at the moment, and there are challenges communication with regulators and so on. But to Ben, your point, I think, Simon, for sure, some of the things that we were less worried about, we're a little bit more worried about now, and I think we just need to develop a new norm.
Yeah, I think the top 10 risks have changed, basically. There was a pecking order, and now they've changed accordingly, and that's what will drive it going forward. I think it's quite interesting that ESG has just risen right up to the top of the list in a very short space of time, because I think everybody's suddenly realised that that is quite important. But you've seen it, especially through COVID, you've seen it sort of explode a bit more. So interesting.
That's actually one of the questions that was being asked by one of the audience is, what's the kind of status of all the panelist firms on ESG? Because somebody said to me the other day, you can't fix ESG with a vaccine.
You can have a go, but yeah, you can't. No, you're right.
Donald Trump might beg to differ.
Yeah.
I don't think, in ESG terms, we have accelerated, as Simon pointed, we've accelerated rather than taking the foot off the brake or even just, coasting. We've accelerated our ESG work. If anything, I think people's working from home experience has maybe guided their radar a little bit more about what they value in their workplace, but also in their life. And I think that's helping the ESG conversation go on. It's gaining traction, exponentially. I think it was already a major factor for us. There's no doubt about that. But it has grown immeasurably as a factor since all this COVID crisis hit.
Yeah, I think I'd add to that. It's not that it wasn't there. It's a little bit one of those things where it's accelerated as well. And I think people have had a lot of time to think. Now there are macro issues as well. Obviously, what's going on in the US, here in the UK. There are some very major changes taking place in the world around us, and so I think all of these things are combining, and COVID is a catalyst for this happening quicker. But I think it was happening. I think just this year we've seen a dramatic just increase in attention.
But speaking of ESG, maybe our values have changed a little bit. We've just suddenly realized what's more important, just as human beings, spending more time with family, being back at home, actually not being in the center of virus, enjoying backyard, seeing blue sky, green trees, and just that human nature is coming back. Maybe there is unfortunately or fortunately, I don't know, COVID itself is a bad thing, but it brought back some human side of us. And then ESG became natural because we think about our family. Now we want to have lunch with them or dinner. We want to take kids to school and we want to take them in a safe environment. And then we look whether we invest with coal companies, oil companies, gas companies, and it's just maybe natural.
And I think this is one of the areas that the regulators are actually more up to speed on producing their views on this topic. Maybe some things like cyber risk in a work from home cloud environment is a difficult concept for these guys to grasp at times, but something like ESG is something they can really put forward as a way for banks to help the wider economy.
But I mean, this has been on the regulatory agenda for a while, right? And been building. So I mean, it was a theme well before COVID. I think what we're seeing in practice in life around us, to your point, Andrew, there's no question people are thinking again about what's important to them, and that translates into their job, how they see their role narrowly and more widely within society. So it's fundamental. It is changing our organizations, and will continue to do so, and probably more rapidly.
Just as an example, I join your role, and obviously you do a bit of planning, you find new people, and you pick up people who are very innovative thinking, and then you say, what do you want to do? And suddenly person say, I don't want to focus on innovation, I want to focus on sustainability. There you go. Yeah, just as an example. Because it's a personal goal. It wasn't a year ago, now it is.
Make sure you renegotiate his contract, or his or her contract, Andrew.
Who knows? Who knows? Let's talk about it in 12 months.
There's one question that's come up from the audience, which I kind of seen as well. When I'm doing cloud research and I've gone back and started to talk to people, I found quite a few talents have been poached by people like Google and Amazon and Microsoft are poaching talents directly from the banking industry at the moment. Has the panel seen that, and how can that be addressed in terms of losing the talent?
I'm not. I think it'll depend by firm. I think I see we're a small niche firm, very specialized, that is in fact transforming itself into a digital specialist. So we're doing the poaching as opposed to being poached from largely. What we're finding is more generically, more traditional banks, the large banks are suffering generally from I call it regulatory fatigue for the last 15, 20 years. A lot of these firms have been very profitable, become less so as regulation is limited, changed what you can and can't do. Things like Brexit, different problem, but also causing issues. And so what we're seeing is a availability of staff from the more traditional banking industry now willing and able to move out of the industry completely, or to move into new whether it's fintech or other areas. So I think there's pressure generally on more traditional banking firms, and probably also more other traditional financial services firms to the world around us is changing, and whether it's a Google or a fintech, I think there is pressure, and talent is being poached, or talent is open to moving, maybe with different compensation packages, different. There's also a culture issue. I think even people who've spent whole careers in a more traditional environment are more likely to be open to even entertaining job offers and opportunities. So the world is definitely changing. Whether it's an exit to Google, I think it goes beyond that, actually.
Yeah, I mean, it's an interesting concept, right? Because as we become more flexible and again, I still think particularly financial services quite staid in terms of its approach to work from home, and you can easily spend 10 hours working on Zoom. If you go to Google or a new tech firm, you might have already been in a very flexible environment, operating on 20% of your time is learning new skills, all of those types of things, which isn't common across a lot of financial services firms. So as you get more and more tired and that energy drain occurs throughout the year, I wonder whether what's happening is people are being tempted away because they can't see a way out of the 10 hours of Zoom calls every day, 5 days a week. Wake up, log in, and the attractiveness of something that's actually probably 3 or 4 or 5 years ahead of us in terms of working environment, particularly in this kind of scenario, is actually incredibly attractive to the way they work, and how you have to manage your home life and your work life and all those types of things. But I mean, I certainly haven't seen that happening large scale. I have seen a massive challenge around people's energy levels unless we brought in flexible patterns or tried to do things that are creative to sort of break up the way that we started working in COVID to the way that we now have to work and how collaboration works and all of those types of things.
Without being offensive to my fellow panelists, none of us are particularly young, and so I think that this is an interesting concept, that the youth are coming into the workforce, looking at what their options are in terms of work-life balance, what they want out of their day. Do they want to spend 5 days a week, 9 to 5 on a Zoom call? I don't think so. And they're also suffering from the secondary problem of being in usually relatively small accommodation, maybe less well off in terms of a setup for a home office, etc. So there could very well be a break in the younger category of staff that I think we're probably not yet seeing the full extent of yet.
No, I'd agree with that, but I also think, to Albert's point, I think traditional banks are evolving a bit more as well, which is actually drawing more of the specialists out of Google and Amazon and people like that, because the banks are moving towards using data more and creating that data to be able to use in a day-to-day basis. And I think that's what's potentially attracting it. I'm not, you see some, but you're not seeing a lot yet. But that's as the infrastructure improves in the particular bank, you get a lot more data scientists now, a lot more of actually interrogating data, because once people monetize that, they see the value on it. And then also from a trading perspective, if I look now, Ben, sure, CBA in London, same as us, hasn't got that many traders who do spot FX anymore. So it's all moving on to the platforms. It's all moving on to the algorithmic side. So ultimately, you need to recruit people who can read code rather than do strict risk management as such. So I think that's where possibly the pivotal point is going to come from.
Okay, we have one other question here, which is, to what degree and in what ways have daily working practices changed during these times? What's kind of highlights you've seen on the change there?
Less micromanagement, sorry.
No, carry on.
So I was going to say the working pattern has changed completely in organizations that wanted to move away on focus on outcome and less micromanagement. You see distinctive difference between people who are traditional managers, who have task lists and check boxes and just want to control people, and people who want to focus on the outcome. These are the people that disappear from meetings and reappear with the words saying like, I don't have time, but they reappear back with the results. And you've got types of people who want to have this regular meetings, catch-ups, updates, and everyone tries to hide from them. So it's actually, for me, it was quite interesting because I was in the middle of, while in London when it happened, of restructuring the team. It helped dramatically to pinpoint people who are true leaders and knowledge experts and people who you quantify as a control people, which you still need, but proportion of them was just way too high. So
what I was,
positive side effect.
Yeah, okay. What I was going to say was, I think the biggest thing for me is setting the boundaries of how you're going to work at home. You know, not having to commute means that, you know, it doesn't mean you've got an extra 2 hours, but you need to set some boundaries on how you're going to do that. And, you know, remember to stand up every half an hour or an hour, get the circulation going, because it's very simple that you can sit here for hours staring at a screen doing Zoom meetings, and then you suddenly realise, God, I haven't moved for 7 hours. And I think that's going to, you know, defining the boundaries is probably one of the key things, and people understanding that. I think, you know, the old adage of someone emailing me at 9 o'clock in the evening with an expectation I'm going to respond within 10 minutes, or it's those sort of boundaries going forward, because, you know, people can do it at any time. If you're going to be truly flexible and you accommodate people's commitments, which is what ultimately we want to try and do, you know, they may not start until 10, they may stop at 12, they might come back on at 5, and they may go back on at 11 o'clock at night. So, you know, I think there's a whole flexible piece that's going to sort of build and come out going forward.
I think one of the big challenges is finding the right balance. And Andrew, I think you have good examples. You know, I think in the early stages of work from home, I know I myself sat on Zoom literally non-stop, you know, from very early in the day till very, very late at night. But over time, you realize you need to find a balance. People became less effective. You know, there's too many meetings and too much. So, you know, there's also other challenges, although I don't happen to be in the office at home today. You know, I can use a personal example. When I'm in the office, there's no problem at home. I'm just not there. And so, but when you're working from home, what happens is that conference call that comes in at 7:30 at night, or God forbid 9 o'clock at night, you know, you've just written home, said, look, I'm going to be very, very late tonight, and it doesn't matter, right? But now you're taking a Zoom call, and you're interfering with you know, people trying to calm down after a day, and it causes, and it goes back to mental health, or it causes a level of disruption in daily lives, or it can. And so I think finding the right balance is the single biggest challenge. I think, Sam, you made the comment, well, maybe you've saved a couple hours of travel time, but somehow it seems to have intruded, and actually that travel time hasn't been saved. You know, people aren't getting it back. It's somehow being absorbed more in other things, or the risk is that it does. And finding that balance is one of the big challenges.
I can tell you, I agree with you, Albert. In spite of lockdown, I'm going to office every day for exactly that reason. So there is a work time and a family time, and now coming back home and spending quality time with family, being able to switch off becomes like invaluable.
Yeah.
And it is interesting, right? But I don't know whether the other panelists have had this, but over the course of the last 9 months, my meetings have got earlier and earlier in the morning as people extend that, you know, you lose that commuting time. And when you do go into the office now, it's not waking up at 6 to go into the office, it's waking up at 5 to go into the office to get your first meeting, because you've had this whole progression of every meeting starts at 7:30 or 8 in the morning. So it's definitely changing that, and I agree. Yeah, I mean, I think one of the things I consistently say to the team is, don't lose all your hobbies. Don't let work become your hobby, because it's really easy for that to happen in that work from home environment. You know, you become very, you know, I love the comment that Simon made around, you know, how you end up just sitting on Zoom and doing the same thing on day in, day out. It's incredibly easy to, I think, to get into that habit. This is where that mental health piece and helping people understand what they should do and how you become dynamic, and how you find the right balance for your working style and your job starts to come into play. And this is where I think our organizations all need to help the workforces make that transition, because I think, once the pandemic's over, I don't think we'll ever work the same way that we worked before. You just think about very simple things. If I had a cold or the flu before the pandemic, I still went to work if I didn't feel too rotten. It should be socially unacceptable to go to work if you're ill. And I think it will be post the pandemic. So we've got to find ways of adjusting how we work and how organizations cope with that.
I think that's spot on, Charles. I totally agree with that. I must admit, my being with the joys of Australia, it is very early in the morning and it is very late at night on a regular basis. So motivation on a Monday morning is tough sometimes. Let's put it that way. So.
Okay, we had a very interesting question raised. Is that we had a question? Is that what the panelists think if a move towards more flexibility could have a positive impact on the mum trap, i.e., women who've had to stay at home as it financially makes more sense being able to continue working, go back to work. Do you think it's going to help them more, this kind of more flexible working environment, and make it easier for them to get back into the workplace?
I personally believe, D&I is hugely important. It's particularly the Black Lives Movement and things this year, and changing work patterns with younger people versus some of the slightly more mature people on the call here. I think it makes a huge difference. I think it'll transform the ability for women to get back into the workforce. We have a number of women who've been on maternity leave, and now there's a far greater level of flexibility that we're realizing we can operate with. So I think it should have a very positive impact particularly on gender balance within our industry, which is notoriously imbalanced, and just generally, I think it's going to improve the ability to extend the level of diversity across an industry that historically isn't that good at managing diversity.
I think you're right, Albert. I think it's going to tap capability and just unlock that. If I can sort of think about it from that perspective, and I think the joys of the flexibility, we're going to pick up some great capability as well. So.
Yeah, and it's much easier to handle things like the school run, right? With more people working from home, there are lots of challenges. We've talked about many of them, but also it just makes it easier to share certain types of responsibilities and things. So I actually think that's one of the positive things that is likely to come out. The problem is our policies don't necessarily properly cater to it yet, but we're learning a lot this year, and there's no question we're not going back to the way it was. The way it will be in 2 years' time will evolve, I think, in the coming months. Obviously, there's issues of vaccine and everything else, but I think none of us want the level of inflexibility that we have today. It's not good, but finding a better balance is going to be more likely, because the taboos of goodness gracious, we couldn't possibly let people work from home. Well, that's clearly gone. Now the inefficiencies and some of the productivity gaps and some of the other challenges that we are seeing, well, they can be dealt with as long as we have a little less of a gun to our head around as we kind of currently have today. Andrew, I think you're on mute.
Right. It's very interesting because what you said, I totally agree. The very first question on the survey was whether COVID has impact on digital transformation, and 49 or whatever, 50 said no. I don't think it's true. Maybe not directly, but indirectly it had massive impact. Unless, of course, we had digital transformation programs that were 3 years ahead and we couldn't change them.
Yeah, I think the extent may have changed, but it's hard to conceive that there's zero impact.
Yeah, I think it's a massive impact because it's a impact. It's a mindset shift, massive. Nothing is impossible after that. Whether we talk about regulatory compliance or anything, it's like you said, there is a gun. Yeah, do it, and we just do it. And we've done it collectively. So next time when it happens, we won't blink. We will just do it. It's very good summary, Albert.
Excellent. Okay. Well, one of the other things that came from the audience was with collaboration being the new buzzword. Everybody's collaborating. What's the view in the panel in banks collaborating to find solutions to common issues, much more than they are perhaps nowadays?
I think it's actually happening. If I think of most of us will be members of UK Finance, let me tell you, there have been probably an increase in meetings multifold, whether it's fourfold or whatever, and it's because we're being forced to collaborate on a whole wide series of issues that some of which are, very, very current, directly related to, collaborating around how we're dealing with the pandemic, but I think collaboration has increased. Whether or not it stays the way it is at the moment or evolves to something new, but I'd be very surprised if there isn't significantly more collaboration and more collaboration with, I'm going to call it fintech generally, because there's a lot of tools that we, that in a more traditional banking environment that just simply can't continue, that have to move to more effective, more digital means. So collaboration, almost by definition, is increasing to solve problems, to do things that we've historically done differently or better or whatever. And it's not small incremental. There's significant jumps that I think are now more likely. And I'm seeing it with us, but I suspect with most firms.
I think we're seeing certainly a lot more. I think a lot more of the banks are getting together to have a bit of an agony aunt session, to be honest, Albert, on what the things that are coming up and what we need to be focusing on. I think there's been a big uptick in sharing experiences, which I agree with. A lot more of that. But I also think it's like anything. If you find something that you think is not a competitive edge, but is going to help other people, I think the community's out there to have a conversation. So I think that plays to what you're saying, really.
So one of the other questions, which I was actually talking to the CEO of a Chinese bank about this the other week, about the new world. And one of the questions that's been raised is, will the banks eat the fintechs or will the fintechs eat the banks?
None of the above. They've got different space to play. Seriously, it's just different. They will work together more and more. And it will be like ecosystem of fintech providers, insurtech providers, proptech, regtech providers working close with banks. Maybe what banks might decide to start reducing some of the burden internal and outsourcing a little bit more, but I would look at it as an ecosystem rather than one or another one.
Unequivocally, I agree with you, Andrew. It's the ecosystem that's changing and evolving, and the distinction, even maybe it's a bad example, but if you look at what's happened with Ant Financial in China, it's quite interesting. Days before the IPO, regulators have stepped in because I think Ant had maybe stepped one step too far, shall we say? And so we're seeing fintechs requiring bank licenses to do certain things, moving a little bit in that direction. You see banks trying to figure out how could I be more like a fintech, So it's around ecosystems, collaboration. I think everybody's far more likely to partner with somebody who's very good at a niche activity. My whole bank's whole ethos is about, you know, sitting as a platform that other platforms can connect to do something that we do better than other people. And now we're very small and very specialist. But for me, there's no question. We're in an evolving world as opposed to it's one or the other.
Yeah, I agree. You know, we're certainly seeing a lot of joint ventures. I think joint ventures is the common theme in our bank, and we see a lot of joint ventures in the innovation space. We have, you know, I think a culture of trying to encourage that in the bank, and that then obviously has benefits for those joint venture partners as well in getting access to, you know, bigger client bases, bigger data platforms to test their products as well. So that joint venture thing is mutually beneficial. I also think that there is a move in the banks, some banks, certainly my bank, to get involved in venture capital on the, you know, in the startup side of things, to encourage it from the actual seed of growth, rather than waiting for something to come along and trying to have that joint venture at that point, where you know, the bank can actually be a partner from the outset to enable the innovation to happen outside of the bank, and allow that sort of freedom to develop, and then bring it back into the fold and use the technology or the IP that they have.
Yeah, I think that's absolutely right. I think, you know, when 5 years ago, the debate was, will the challenger bank take over the traditional bank in the marketplace, right? And I think really, with cloud and everything else that's come along, I think that's just gone. I think that's to both your points. I think banks have realised, as they've done on previous occasions, they're good at banking, but they're not good at other things. And it's probably better if you joint venture with something rather than trying to develop it yourself. And I think that's where we've evolved to. But I also think, to Andrew's point, I think it is the ecosystem is now completely changing, because, you know, the advent of cloud and the advent of doing stuff on the cloud is basically changing the whole dynamic. But it's also, you know, let's be honest and put your hand up. How many banks do you know who use their data properly, or have got data that actually sort of is any shape or form that's of high quality? Probably, you know, one or two possibly. But I think that's where the technology and the ecosystem is changing. I think that's where the focus is for a lot of the traditional banks.
Yeah, and I think the other piece on this is not just in terms of solutions or things that fintechs have come up with, is it's more and more banks or financial institutions are looking at how and why fintechs have been able to accelerate, how they really worked to accelerate and innovate you know, their particular proposition so quickly, versus our traditional ways of working. So yeah, you can easily see that. You know, if you look back over the last 2-3 years, you know, the introduction of cross-functional teams, you know, people trying out different ways of innovating and bringing some of this in, trying to learn. You know, I think one of the big things with joint ventures, one of the big benefits with joint ventures is it creates an environment where you get you really get first-hand experience of how a different organization operates and innovates and comes up with an alternative way of delivering a proposition. Yeah, and it's first-hand experience for the team. It's not something that you can read. That type of experience is not something you can teach or read, you know, in a book. It's actually combining two different teams, helping them explore how they operate, and you know, hopefully what you get out of that is some sort of hybrid that leverages all this institutional knowledge that you have in your organization with a different, more agile, you know, innovative way of working. And that combination, I think, is quite powerful.
We went on a question in the audience, which is quite interesting. Are you seeing an accelerated rate of change shift in the landscape of banking? What trends are you all seeing to adjusting the business operations and also the revenue models of the banks. So digital currencies, multinational, digital IDs, touchless banking, etc. Are you seeing big changes of that coming along, like that coming along in the future?
That's a pretty wide-ranging question.
I know it's a wide question. But,
I mean, I'll give it, just one very, very simple example that probably isn't as evident sitting here in the UK. But if we're very active across Africa, for example, and if you look at payment systems, the payment ecosystem across, the continent has the fastest growing populations in the world. Is transforming. Financial inclusion has always been a challenge. Traditional banking model of having a bank account and a bank branch near you and an ATM. Well, that's being completely, it's almost being leapfrogged with the advent of mobile money. And I'm going from memory, but I think about 10, 12 years ago, there were a couple 100,000 mobile wallets in existence in Africa. I think last year there were 469 million people that had a mobile wallet and could make or receive payments using the mobile phone. And there's no credit card attached. This is not Apple Pay, where it's basically just your card but being you're tapping. It's we've got a whole new payment system and infrastructure that's being created, and a traditional banking infrastructure. There's interesting regulatory challenges around how do you make sure there's no systematic interoperability and things, but it's a fascinating world that is evolving at extraordinary pace, and this is particularly true across a lot of developing markets where new ways of thinking about I'll call it financial inclusion, but how do you make and receive a payment is changing. And so, this world is changing. There's no question about it. I'm personally not a big fan of cryptos, but that's not really relevant. There's real solutions coming in place around moving money across borders. We can simply do an instant payment.
Not moving money across borders, but just changing the balance. It's completely different.
It's so now we can do instant payments. I mean, it's possible for somebody, somebody working here in the UK to go online, with either a bank or one of the new fintechs, and instruct a payment, and you can have within seconds, you can have a credit appearing on your mother's mobile wallet in Ghana. And it's a fully automated, process. I mean, it's wonderful what you can do right now, and you do that at a fraction of the cost of more traditional, I'm thinking remittances specifically, cash across the counter, one place, and cash coming across the counter in the other. So, we're seeing dramatic transformation in a number of parts of banking, and it's not always necessarily going to be in country. A lot of innovations are coming in other parts of the world for cultural and for any other reason. I mean, China is obviously, there's a complete transformation. You have 1 billion people that have gained financial capabilities in a decade, or slightly more. But I mean, it's extraordinary the changes that are taking place. So the world is changing, and the bank of the future is not the traditional bank that most of us probably came out of. And the rules are evolving, but not always as fast as the technological capabilities. And so we're going to see a lot more circumstances where there's a dilemma around, can you do this or can't you do this? How do you stay safe? How do we the things that are important to us, protecting against financial crime and those sort of things. How do you do that in these evolving worlds? But technology is pretty amazing what you can do to achieve a better outcome, but you have to be thinking differently than you may have thought in the past.
And we can throw digital currency into that all of the central banks are talking about, and centralized, decentralized, intermediated, disintermediated. And we can talk about digital currency, but what you say, we need to be ready now to deal with digital way of doing it, whether it's cryptocurrencies, knowing what custodianship means, knowing what privacy challenges are, handling cash and having private wallet, registering for it and ensuring privacy while guaranteeing your money is like oxymoron, right? So, and we're not thinking about it, but these are the real challenges that we need to think about it. So as you said, technology is there, but we are not.
And new ways of ID. I think one of the questions is ID. You know, biometric ID is becoming a norm in huge parts of the world that don't have a more traditional. You know, I suspect everyone on this call has a home address that is unequivocal. You know, and a postcode, and there's no question about getting a letter to you. That's not true in vast parts of the world. And so, you know, biometric IDs are. You know, how can you prove you are who you say you are? But actually, there's far better ways than our traditional signature. You know, which by the way, we all know is kind of meaningless, right? Although we don't sign very many things anymore. But so the world is transforming, and you know, we running financial services businesses need to be thinking about how do you use all these tools to achieve an outcome that is the appropriate outcome, right? A safe, secure, etc. I think Audrey, you gave great examples. You know, how do you get the right outcome, but not necessarily do it the way we've always done it?
Okay. One area we haven't talked about yet really, or too much, is cybersecurity, and the fact that we're all working a lot more remotely. There's a lot less controls, a lot less people using their own home devices. And one thing we saw in research was cybersecurity becoming much higher priority. It was pretty high before, but it's even higher now. What's the panel's view on cybersecurity and where banks are at the moment, or financial institutions are at the moment, and where they should be?
Well, I think it's a ticking time bomb, really, Geoff, to be perfectly frank. I think, you know, especially if you're CRO, it's not very clear about what role you play in the process as well, and whether it's the head of technology who deals to cyber, or if it's some of me or them, or a combination of the two. So I think that is probably one of the things that's certainly playing out. But I think every day, and I get the reports every day, and I go on quite a lot of pieces, but the volume is just exploding, because basically there's a lot more people working from home, there's a lot more opportunity, there's a lot more machines now being pumped and used. So obviously you can see where the cyber criminals are now focusing. I also think over the last probably 4 or 5 months, and we saw it in the US elections, we've seen it in various other elections, there are probably concerted efforts by certain countries to actually invade and get into systems potentially, and I think that's picked up as well. But you know, if you just take, for example, all the relevant countries who've put a furlough scheme on, or put something like that, you know, they were talking about a POS of north of 10-12% fraud rate on actually those types of support that's being given, which is huge in the period of time we're talking about. So I think realistically, we're all very worried about it. You can do as much as you can possibly do, and we'll all have an approach to it. But you know, they're always sort of 2 or 3 steps over here, where they're continuing to look for vulnerabilities. So I think it's, you know, if you talk about the Bank of England Stability Report, you know, cyber was probably 3 or 4. It's probably 1 or 2 now. It's certainly going up the list as such.
It's a classic area for collaboration. We talked about collaboration earlier, but there's no competitive edge in being better in cyber. You know, and the evolution of the threat is evolving so rapidly, and so much at stake. You know, has there been a change? Yes. I mean, most organizations have a wider sort of surface that can be attacked. So it generically, if it isn't at the top or very high very high up in the stack of risks, then there's probably a mistake.
Simon, as you were talking, I just realized you said it's slowly coming. It reminds me when the COVID came in December last year. It was slowly coming, yeah, and then it hit us. So I think around cybersecurity, privacy, and all these issues, that's what's going to happen when volumes hit critical mass, and we realize we can't handle it. Then we will start panicking. But for now, we know it's coming. And we know it's coming for sure. Maybe we can learn something from COVID.
Yeah, maybe we're watching the train wreck as it arrives. Yeah.
Just personally, one of the things I subscribe to in terms of, I've got a service as a part of, in fact, it's a UK credit agency. I think it's ClearScore, that you subscribe for, I don't know, $2.99 a month, and it does scanning all of your emails, whether they were hacked in the black databases in darknet. $2.99, wine, coffee, and it actually, the moment it finds in database, I get report and I change password. For that amount of money, it's bloody good service. Like, out of everything that I came across in the last 3 or 4 months, it's the best.
All right, that sounds good.
I'm just noting it down, Andrew. I'm noting it down, mate. I'm noting it down.
Yeah.
I think others are doing it as well. I think there's a few service providers that provide that.
But none of the banks are doing it.
That's right.
Speaking of building trust between banks and customers that has been there for hundreds of years, seems to be like a super obvious thing to do, even for free.
Yeah, I think you're right. That's a great thing. Might send that off to Australia tonight, see what reaction I get.
Yeah, I'm sure National Australian Bank will do it.
When I've been going around talking to financial institutions, they kind of mentioned 3 things to me in terms of what they're looking at. One of them, cutting costs; 2, regulatory compliance; 3, competitive advantage. And one of the questions that we've had from the audience is almost the cutting costs versus making the investment, i.e. digital transformation, to get competitive advantage. It's quite hard to kind of do both, really. So what's the panel's view on what banks should be doing, one versus the other?
I think that's an Albert question, definitely.
I was just contemplating, do I want to tackle that one or not? It's a serious challenge because if you think most banks are hurt in one way or another by COVID, right? It would be very few institutions. I will say, actually, I think I'm the only bank out of 460 that I've looked at that neither had a decrease in our credit rating nor a change in our outlook. But that's because we have a very narrow business model. But even we, with that, where we're growing at a very, very rapid rate, have seen that growth rate impeded by the indirect impact of COVID. So and one of the challenges we are struggling with is the extent to which we are prepared to continue to invest at the level we're investing, to continue to drive our revenue growth opportunities. And, in so doing, a piece of our flexibility has disappeared because of a component of our revenue stream is just gone and I can't replace it, or should not replace it in the short run. So it's a massive trade-off. And I think what we're going to see, and I'll make a very sweeping statement, which will, undoubtedly there are many, many examples where it's not true. But, I think a lot of banks are trying to figure out to what extent your profitability can be reduced without it impacting share price and shareholder reaction, because we have to keep investing, right? And depending a little bit on the nature of the bank, there are always areas where you can manage your costs, but this year has seen such a dramatic change in the landscape that a lot of banks will lose money because they have no other choice. I mean, we haven't really seen the loan losses coming through, right? And that's largely because of standstills and everything else. But you'd be pretty brave to think we're not going to start seeing some pretty scary loan losses and things in over the next say 12 months or so, depending a little bit on the nature of the bank. It's a very, very difficult question, and it is the trade-off. We know, every organization that I'm aware of knows that the need to digitize more rapidly, but guess what? There aren't enough resources, specialist resources, available. So we're working with a third party on a number of projects, and the demand on those specialist resources has doubled or trebled since COVID. And that's a challenge, right? Because now all of a sudden people are, different organizations may choose to pull out their checkbook if they still have one of those, or digital wallet, I think every organization will have their own trade-offs they're going to have to play. But I think generically we're going to see a less profitable industry over the next 2 to 3 years, as the required costs to continue this transformation that is being supercharged right now are going up, not going down, because of a tremendous demand, crunch. And what's an acceptable trade-off? Now that second is every firm is going to have their own risk reward, trade-off, and it'll depend on circumstances. But we're in it is a much harder moment for any bank CEO today to figure out, what are the trade-offs that I'm going to play. And I think we'll see over the next couple of years, we'll see significant divergence of performance and future outlook, depending on decisions being taken right now by different, by the executive management of a lot of financial services businesses.
Well, I think you hit it on the nail there. I think costs is the biggest problem, to be honest, keeping the costs down in the current environment. But you're right, there will be a lag as defaults come through, because it's just what's going to happen. But driving the costs down to ensure banks are profitable, and also ensuring that they have capital strength as well. I think that's going to be a key thing, really, is ensuring that the bank is, can deal to the stresses which are obviously going to filter through the system. So.
For me, it's a tricky question because, interestingly enough, before joining ING, which was in 2015, I've dedicated all my life of getting rid of banks. And since 2015, I've been doing completely opposite. So the one thing I learned, you have to play not as a bank, but you have to play as others to understand it. That's why I keep going back to ecosystem. And since joining ING and then moving to London and now here, it's actually the concept of building open ecosystem could be way out, but it comes with compromises where, as a bank, what we're doing, we're deciding what we are good in and focusing and invest, and what we are not good in and work closely with somebody else. And this is bloody difficult decision, like deciding whose kids are better, right? But we have to do it. It may be a way out.
Well, I think that is the whole point. That is the trade-off. And that's why I say in a couple of years' time, we're going to see who's got it right and who's got it wrong. Because you can't, the concept of the universal bank that does everything for everybody, it just doesn't work anymore. And I made a personal conscious choice to operate in an extremely narrow niche, but it's a niche where we believe we are the #1 player in the world. And it's an interesting niche, but this niche is not big enough for there to be 20 players. And there's reasons why it's hard to get into this particular niche. But I think we're going to see more and more firms, as you've discussed, that are going to have to make very hard decisions. What am I truly very good at and excel in that? And what are the things that you may want to offer, but literally you're going to use somebody else's? And open banking and other ways allow you to begin to offer those capabilities. But to try it and do it all yourself, I mean, my early career was very much in big banks that did everything for everybody. Boy, there's nothing that could make me want to do that ever again in my life.
What, did it stop in 2008?
That's a difficult. Let's take that conversation offline. But no, the world has changed, and so it is an interesting and very challenging period for let's call it traditional financial institutions to figure out what is the right approach going forward. But I think business as usual. COVID doesn't allow us to do business as usual. But even if you wanted to just go back to the way it was, assuming vaccines and everything else, that's not the answer. That, you know, it hasn't been for a while. It definitely isn't anymore.
I think the other thing that's interesting is just been watching across the industry how people change to. Sorry, I have a visitor who's just joined me.
That's our new reality. This is what you
learn.
You get to know bedrooms, family members, pets.
School's just finished. So, I think the other thing that's really interesting is just watching how people how firms have responded to changing client demand. Because if you weren't connected to your customer and you didn't listen to what they wanted in the first place, or understand what they wanted as we went through the COVID period, and you didn't adjust to do that. I mean, I've got numerous experiences, personal experiences with opening accounts, trying to get changes to accounts or move things around, where banks or non-banks just couldn't cope with that transition. And it's a really interesting construct, because if you weren't close to your customers and you couldn't be dynamic, you weren't investing for the future, you're investing to keep your current client base. And I personally ended up closing a whole range of accounts or changing suppliers and things simply because I was a customer of a firm that wasn't listening to my needs, and I could find another firm that actually was quite connected with what I needed in the first 6 months of this year.
Charles, we just saw an example of a very good customer understanding. You definitely needed some water, and it was there when you needed.
Yeah, I've got no luck for that in my house, but anyway, there we go. Thank you for that.
So I guess we're coming towards the end now. So I just wanted to see, what for the kind of for the audience, the closing comments from the panel on, the highlights of what's going to be happening over the next few years in financial institutions. I know it's a big question, but if you can just kind of give a helicopter view on it. Who wants to go first?
Digital.
Yeah, a couple of things I will repeat. I think ecosystems will become more prominent, and giving up things we don't do well will be solution to survive. And I think the whole area of payment space, digital currencies, will probably explode. And as a result, as Simon said, there is an issue that is coming our way. It will come our way around privacy and cybersecurity that we'll have to address.
Yeah, I think for me, I'm very interested to see how things evolve in this new environment and how we cope with COVID fatigue, because I don't see this going away anytime in the near future. And I think this is more going to be how we're going to be COVID and living with it normally going forward. And I think that for me is probably one of the biggest things. I also think that, not so long ago, we went through some fairly large geopolitical changes. I think we're coming around for the same lot of those again, and I think that's going to change the landscape again. So I think it's more the environment, and I think it's the wider geopolitical piece as well.
Thanks.
It's interesting because I mean, the world as we know it is somewhat changed, and I think it's changed for good. I think most people have said that. the interesting thing for me is that I think, if you look across the patch at all of those different dimensions, that, and not just within financial services, we have solutions in industries. We've got ideas in, across some financial services. We've got fintechs. We've got all these different things. So I really think that the firms that look at this as an opportunity to reposition themselves, re-identify, understand what their customers need, work out how they deal with, employee, health and productivity, present those dynamic working, all of those types of things. I think there's a massive opportunity, because I think what's just happened is this ability for firms to really differentiate themselves to the employees, to the customers, and to the rest of the industry. And firms that embrace that, I think, will skyrocket and start to accelerate away from some of the competitors.
Yeah, I couldn't agree more, Charles. I think that's a very strong point there. Adapting to the new flexible world that we live in is critical. And I think the one thing we haven't possibly mentioned here is how we are harnessing data. Digitalization is one thing, digital transformation is one thing, but if you don't then, as a bank, capitalize on the data you have, you can't then go and adapt and use that data to help your clients deliver what they need. So for me, the turning it from a cost, turning it from a problem into a solution happens with analyzing that data in a better way, because ultimately I think banks are essentially big data warehouses now.
I would just kind of group all of the different comments together. This is truly the first time in decades where there's a confluence of events that have come together that will force quite a dramatic transformation in our financial services industry. And it's a very interesting moment. It'd be wonderful if you could fast forward 5 years from now, because we will see very different winners and losers than we have today. So I tie in, it's data. Data. You can't do data if you don't have digital. You have to really understanding a very new way of interacting. So how customers think, how we have to be different. And of course, the challenge is for heavily regulated banks versus less regulated, I'm going to broadly call it fintechs. That's going to be an interesting challenge that we'll see the boundaries being tested, in many different ways. But I think we'll move to a new normal over the next couple of years. But we're in a moment in time where you can truly say it is going to be different, in a way which I don't feel I could have said in my fairly long career in the financial services industry. Things have evolved, but now the evolution is, I think somebody made the I'm going to call it slingshot. It's the acceleration is extraordinary, and it is because it's possible now.
Can I just say I totally agree with Albert's summary there, but I'd also say there is one constant thing which will continue on, and that is that we won't have a Brexit deal. So I look forward for 5 years' time. So it's great. So there we go.
Okay, brilliant. All right, well, I'd like to ask Chris to come back and just summarise on behalf of Citrix. Chris.
Yeah, no, thank you. Thanks, Geoff. Just to say thank you to the panel, to Ben, Albert, Charles, Simon, Andrew. Yeah, really interesting discussion. I think we've covered so many different topics and probably just scratched the surface in some of them, from remote working, ESG, security, change, data, diversity. Yeah, I mean, across the board. So yeah, some brilliant insights, and thank you to everybody who's joined the webinar. Some really good interaction, lots and lots of questions which we didn't get to, unfortunately, but some really good insight, which we'll send also to the panelists after for your review. So yeah, thank you to everybody. It's really interesting discussion, and thanks to everyone who's joined.
Great. All right. Well, thanks again, Chris. Thanks again to all the panel. As Chris mentioned earlier, we will have coming out very shortly a white paper that will cover a lot of the information discussed today in more detail. So as soon as that's available, we will definitely let you know. And thanks very much for coming, and I hope you found it very useful.
Thanks.
Thank
Cheers,
you.
Geoff.
Thank you.
And I learned new skill, how to disable security to connect.